All right, welcome to Suna BFX. This is a risk management video. Before we go into the strategy video, all right. Um, First of all, risk management is an attempt to control your losses while trading to become profitable on the long term, right? So, while risk management is an attempt to control your loss and so that you have minimal loss and have big gains, big wins, big profit, so that you can stay in the game for a long time. You know, the forex market is volatile and there's nothing that is certain. It's work with probability. It's a game of probabilities. So with risk management, the odd is in your favor. The only thing you can control while trading is your risks. I get in. You can't control the market. No strategy is 100%. Every strategy have a certain win rate. All right. Which this strategy I will be sharing with you is not an exception. So what will give you an edge is your risk management, your ability to manage and control your risks so that you will not get emotional and blow your accounts. All right. Now, no matter how profitable you are, if you are bad at risk management, you have losses. Risk management is what separates professional traders from gamblers in forex trading. Now, there are two things you can only be in forex trading. Is either you're a professional forex trader or you are a gambler. If you're a gambler, what you think about is just profit. You're not thinking about the long term. You're not thinking about your losses. You're not thinking about the fact that you are losing money. You're always thinking about what you will gain and not thinking about loss. And even when you accept more of loss and minimize your gain, all right? Minimize your gain when you are a gambler. But as a professional trader, you cut your losses and target more profit, all right? You cut your losses and target more profit. So the goal in this forex trading session is for you to be a professional trader. And you don't become a professional trader by having a good strategy. You become a professional trader by learning how to manage your risks and your psychology. All right. So notes on risk management. The first thing you need to know that risk management is what will make you profitable in the long term. All right. Some traders are profitable today and they are down in loss tomorrow. Their account is up today, tomorrow their account is blown. The reason is simple: risk management. Strategy has nothing to do with it. It's all about risk management. If you manage your risks well, you'll be profitable. If you don't manage your risks well, you will blow your account. It's just a matter of time, no matter how profitable you are. All right, risk management again makes you trade like the casino and not the gambler. Now, there are two people in a casino house. There is the casino house and there is the gambler. The gambler just comes because he wants to make money, is fixed, he bring all his money and he just gambling, fixing because he wants to gain. He doesn't mind the losses. All right, he doesn't control his losses. He allows his emotion and psychology to be tampered with. But the gambler on the long run invests his money, waits for the gambler to keep investing. Then the gambler will think is anytime he wins, he's cheating the casino. He doesn't know that in the long term, the casino will be more profitable than the gambler. All right, so be the casino, not the gambler. Another thing I want you to take note is this: always risk 1 to 3% of your account per time. All right. Now this is a relative for guys trading over 10k account, 5k account, prop firm account, and etc etc. All right. But for some guys that you want to be flipping small account, $100, $5, $10, $50, you can't definitely risk 1 to 3%. You will need to be risking 10%, 20%, and like that. Risk management when it comes to percentage on account is not applicable to small account. Yes, this is the truth. That is why trading, it was not designed for the poor. Trading was designed for the rich. So it requires huge money. All right. So, but nevertheless, if you're starting small, I think you can. If you're going with 50k, $50 account, I think you can start with risking 5%, risking 10%, and all that. All right. But just what you should have the concept in your mind is risk management. Let it ring in your head. All right. Then the next thing, always target a minimum of 1 to 3 or more. Your reward ratio. If you're risking 1%, make sure you're making 2% at least, 3%. Don't risk 1% to make 1%. Don't risk 1% to make 0.5%. Don't risk 1% to target 1.5%. You won't be profitable that way in the long run. All right, because definitely some of your trades will enter losses. So if you want to stay profitable, you need at least 1:2, 1:3. And personally, I don't even like 1:2. I don't. I 1:1 is a no-go area. 1:2, I don't really like it. It's not a B. It's not an A plus setup for me. My A plus setup is 1 plus 3. I like 1 plus 4. I like 1 plus 5. I like 1 ratio 10, like that, like that. All right. Now, never enter a trade without a stop loss and take profit. Let it be in your head. Never enter a trade when you have not calculated your stop loss and your take profit. All right. You are not just hop into a trade with the fear of missing out. All right. Always know your stop loss and your take profit. Calculate it, accept the loss, and accept the profit before venturing into it. Always trade your plan and plan your trade. Listen to me, guys. Stick to the strategy. Don't jump from one strategy to the other. Every strategy works. You just need to stick to it with a particular plan, and it will be profitable to you on the long run. All right. So stick to your plan. Stick to the plan. Stick to the plan. All right. Stick to the 1%. Stick to the 3% profit. Stick to the strategy, and watch your account multiply. All right. Never overtrade in a single day, no matter the opportunity. Tell yourself, with just 1 to 2 trades, I'm okay per day. Either I win or lose, I am off the market. I am off the market. This is it. This is it. I am off. All right. All right. Then another thing again, always withdraw your profits from time to time to spend on yourself. All right. It took me many years to learn this particular one, but it helps your trading too. Always withdraw your money to do a major project, major thing, because at one point or the other you might still blow your account. All right. So always withdraw your money. Top traders they will not tell you this, but this is the truth. The more you withdraw your money and spend it and get something serious, the more you become a profitable trader. I remember last year I flipped a particular account and I used it to get something tangible. And that thing I get up to today is one part of the things that is motivating me in Forex. All right. Even if I lose money today, I know there was a time I put so amount. I put $10, I put $50, and I was able to convert it to this amount, and this is what I bought with it. All right. That's a take home for you. All right. And again, another thing I want you to notice is, which I didn't write down. Avoid the news. Avoid trading the news. Avoid trading the news for now. You have no business with the news. Avoid it completely. All right. Either there is a news coming out or not, avoid it. Don't mingle with the news. Avoid the news completely. Avoid the news completely. This is for your mental health. This is for good. Most of the trading account I have blown majorly as a forex trader come from news trading. All right, majorly. All right, majorly. Most of my account that I've lost came from news trading when I was starting. Right, when I was trying to learn fundamental analysis and etc. etc. But take note, avoid the news completely. You're a technical trader. You have a simple strategy that I'm going to give you. Stick to it. All right, so this is an example. This is an example of a practical risk management example. I created this graph roughly, and you just have to bear with me. All right. So we have two traders. This is an example. Two traders were given. We have trader 1 and trader 2. Right. Trader 1 and trader 2. Right. They were both given $100 as their capital, and they were given a strategy with 30% win rate. All right. 30% win rate means is how many times you will be profitable from a ratio 1 to 10. So if you can win, it means if they say a strategy is 30% win rate, it means if you take 10 trades, you are going to lose 7. All right. And you're going to win only 3. But this strategy I'm giving you here is over 60% win rate, over 60%. All right. So you see you're safe. Now, trader 1 had a plan. He's risking only 10% on the $100 account and is targeting 30%. Trader 2 did not have a plan. All right. So trader 1 took a first trade, as you can see, lost, 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 lost. And on a 6 trade row, he lost. So he lost $60 and it is remaining what? Only $40. All right. So he took another trade with risking $10 out of the $40 and he won. He won this time. Risking $10 out of the $40 that was remaining 30, plus the $10 that he did not lose, plus his profit of 30, which is the 30%, right, making it $40, plus the previous $30, making it at this point he has $70. Are you getting it? So he's 30% down. Then he took another trade again and lost another $10. So he now have how much now left in him? $60. Then he now took another trade again and won. This time he won again. So 60 plus another 30, he now have 90. All right. He took another trade again. He took another trade again and won. This time again he won. Now from 90 plus 30. Now this guy is up. Now this is $120. All right. So this guy is up with $20. All right, $20. So at this point, he was up with 20%, 20% on his account. He was up with $20 in his account. But this other trader, what happened? He didn't have a plan. He was just trading. He lost $5 at first. He fixed $5. Are you getting it? He now won this one, won $30. Are you getting it? Then lost $15, then lost $20, then lost $30. You now realize that only on these three trades, 50, he has lost $65. $65 plus this $5, that is $70. He lost $70. Made 30. 30 plus 30 that is remaining now. Are you getting it? Is now 60. All right. Now, if he risks another $50 here, $40, you will now realize that this guy will soon blow his account. All right. This guy will be in a loss. So this is the power of risk management. This is just a rough this thing to show you the power of risk management. Please and please manage your risks. Plan your trade. Risks 5%, 2%, 10%. Make sure if your capital is little, make sure it gives you enough time to trade and make back your money. If you're having $50 and you're risking $2 per trade, it means you need to lose 25 you need to lose 25 trades to blow that account. If you are using $100 and you're risking $5 per trade, you need to lose 20 times to blow that account. If you're even risking $2, you need to lose 50 times to blow a $50 account, which is practically not possible in Forex if you know what you're doing. So please, if you stick to what I just taught you here, is enough for you to become a profitable trader. All right. Now, this is it. Thank you very much. Get ready for the strategy video. Peace. God bless.